Good morning. You listen to FloorDaily.net, and I'm Kemp Harr. This morning, my guest is Santo Torcivia, an economist that tracks the flooring market and a partner with Floorfocus. So today's 9/11. It was 22 years ago today that our shores were attacked by terrorists. Do you remember what you were doing?
Yeah, actually, I was in a bank, and the teller told me, "Hey, did you hear what happened?" Okay. I didn't think much of it, to tell you the truth, because I remember back during World War II, a B-25 flew into the Empire State Building and didn't hardly do anything. But it turned out to be a gross underestimation on my part for that day. I always remember that.
Yeah, there was almost 3,000 people killed. I was actually filming a commercial with Shaw Industries. I had Bob Vila and Kathy Ireland and Jim Walker, and we were doing a soft back carpet commercial. I'll never forget that day. We were up in Vermont. Anyway, you just released your quarterly market monitor. It's a nice big report that you put out quarterly that tells what's going on in the flooring business and economic factors that are affecting the business. So what are some of the key takeaways?
Well, one of the key takeaways is that the flooring industry is slowing down faster than the rest of the economy. I think there are a number of reasons for that. One is the federal government is pumping all kinds of money, but they're pumping it in selectively, picking winners, and everybody else by default becomes a loser. Inflation is slowing but not fast enough, and we see the imports are slowing down significantly, and I think that's mainly because of overbuying in the previous quarters that are starting to catch up to us now, and people are draining down those inventories, selling out of their stock rather than import more product that they really don't need. The other is, of course, all the inventory that's stuck in warehouses at different ports because of the UFLPA and the inability of the federal government to
give clear direction. That's
absolutely.
That's the problem. Yeah, let's handle a couple of these sectors. So the weakest sector is the residential remodel sector. I don't know, but the consumer's just kind of gone home. They spent a lot of money in the last couple of years fixing up their homes. That took care of a lot of pent-up demand. It's off maybe 15%. The two other sectors, though, the builder sector is starting to come back alive. And, it takes a little while before flooring comes in, but we're seeing a little bit of energy there. And then the commercial market has been trudging along, doing okay. There's some sectors that are strong, like education, hospitality, and healthcare. Then there's other sectors like corporate office, which is weak because people are working at home. So that's a quick snapshot, right?
Correct. And the whole situation is magnified by two things: inflation, which is keeping interest rates high. That not just goes for mortgages, but that goes for prime rate and commercial lending. And, and that affects new home construction. For builders can't borrow as easily. Commercial businesses can't expand as easily because interest rates are so darn high. Yeah. The other thing, too, is uncertainty. This whole uncertainty with remote working and what's going to happen to these big office buildings in major metro areas. If these things default, that could have repercussions across the United States with real estate bankers keep these offices running, and if they're not needed and people start defaulting on their leases, and they're going to be difficult to repurpose. I've talked to some architects, and it's very, very hard to take an office building and make it into a residence. It just doesn't have the plumbing. We'll see what happens.
You're not calling for a recession, which is good. I mean, you're calling for ongoing slowdown and a little bit of recovery starting next year, but we're probably going to dodge the negative GDP, aren't we?
Yeah. From the beginning, we've never felt that this economy was headed for a recession. It just was too strong in a lot of areas for it to collapse into a recession. A slowdown, absolutely, and that's, I think, what's happening right now. And the consumer market is getting hit because people are being stymied by inflation and high prices, and they're pulling back, and, flooring is a discretionary purchase. So they're holding off.
You have a table in this thing I want to go through real quick, and it's interesting because it's a year-over-year comparison, and the first half of 22 was strong. So in the first half of 23 versus 22, you've got carpets and rugs down 11%. You've got ceramic tile down 5.7, laminate down 12.8, resilient down 17.3, which I think is a big number. That's surprising. And wood flooring down 16.7. So when you roll them up by volume, it's a total flooring down 12.6%. And like you say, imports are down 30%. But as we start tracking year over year in the second half, those numbers will improve because they're up against weaker numbers from last year, right?
That's correct. And more, the different categories are being dominated, except for carpet, by imports. And imports, when they're down, they hurt the whole market. And they're down right now. And like I said, people are pulling out of their inventory. They thought it was going to be better than it was. I don't know what their buying policies were, but obviously they were too optimistic for the situation today. The housing market, the single-family market seems to be holding up much better than multifamily. Builders were expecting that the high mortgage prices and the high home prices were going to stymie the growth in single-family sales, and their people were going to go into multifamily rentals, but that doesn't seem to be the case. In the single-family market, if you're in a situation where your kids are all gone and your house is too big and you want to sell it, you got a lot of equity, and the high mortgage rates don't mean that much, especially when you're trading down to a smaller home. Those mortgage rates, 7%, don't seem to bother people in that position as much. All of that's keeping single family up. The other thing is people are losing the race against prices, even though incomes are going up. It's only going up half as fast as inflation. So, you're actually losing ground. And so they're forced to cut back.
All right. So next year, you think the Feds will be bringing the rates back down because it's an election year, or what's your call on that?
We expect them to come down. We expect them to pull it down. I don't expect to see much until towards the second half of the year. I think the first half is going to be slow. I would caution being too optimistic for the rest of this year or the beginning of next year. But as in the second half, we should start to see some bounce back. And 25 should be a pretty decent year, too.
All right, Santo. Well, I appreciate you telling us you read from the Market Monitor report you just came out with. Again, been talking to Santo Torcivia, an economist who follows the flooring market, and you've listened to Kemp Harr and FloorDaily.net.